Hello everybody, welcome back to The Good, The Bad and The Bitcoin. My name is Dirk. I've been a trader and investor for 26 years. And on today's video, I'm actually not talking about what I have been talking about the last weeks, which is my 100K trading challenge, because there's not so much in this case to update you on. It's still going well. Account is sitting now at 782 US dollars, so we're up by 56%. However, I have to trade there very carefully at the moment because the markets are so crazy volatile. So I'm really only, if possible, are using a leverage of 1-to-1 or 1-to-2, which makes the account grow like less strong to the upside, of course, but also saves me from situation where I get into a bad trade and maybe risk that the account goes back to $400, $300 or even crashes. More on updates, of course, in the upcoming week for this challenge again. However, today I really want to concentrate on this here, the connection between the M2 money supply and the price of Bitcoin, because this gentleman, Chicken Genius, he found out through his analysis that there is a correlation between those two of 0.82%. Now, what does correlation mean? A correlation of 1 would mean it's a perfect correlation, meaning every time the M2 money supply goes up, the price of Bitcoin goes up. A correlation of 0 would mean that there is no correlation, it's all random, so to say. So a correlation of 0.82 gives an indication that, there is somehow a connection between how much cash there's available on a global scale and the price of Bitcoin. And it kind of makes sense in my opinion as well, because of course, if there's a lot of cash, the likelihood of this cash being invested in risk-on assets, such as stocks, such as cryptocurrencies, especially Bitcoin, is of course also much higher than when there is no cash available. However, we of course could stop here now and say, hey, this is interesting, but I want to show you actually today how you can do an analysis like this by yourself, very easy within really just 15 or 20 minutes with the help of AI tools and with the help of readily available data out there. So you don't just need to trust somebody, especially on social media, when somebody's posting something, but you can check the facts for yourself, because this is really, in my opinion, a cornerstone of becoming successful, not only in trading, but also in investing, that you can analyze your own ideas, back them up by data, and also fact check, is what other people are posting out there the reality, or are they maybe making something up to follow their own agenda? So let's build here our own correlation model and compare to the findings of Chicken Genius. Now, the first thing here is always we need the data. The global M2 data is a little bit difficult to get. There is a workaround, which I'm going to show you later. For starters, we can, for example, work here with the available M2 data by the Federal Reserve Bank of St. Louis. So you just need to go to the homepage, search for M2, and in my case, I was interested in data between 2011 and the most current data, which is February of 2025. Downloaded the data as a CSV file. Then I went to TradingView to do the next. So I went here and looked for the so-called Bitcoin all-time index. And I changed it to a line chart because I just want a daily price. I'm not so interested in the daily highs and lows. And then you can go up here and download this data, export this chart data. In my case, I opted here for ISO-time. But anyway, we are using Python to kind of align, of course, the data we have from about the M2 money supply and the price of Bitcoin. Click on export, save this also as a CSV. Now, next thing we need to do is we need to create a little bit code, preferably, at least for me, in Python, that allows us to calculate a correlation. And if you don't have like a Juniper notebook or any other Python working environment installed on your laptop, or you don't want that, maybe you're working with a slim little laptop that also doesn't have the computational power so much. A good choice here, in my opinion at least, is to use Google Colab, and because it lets you use computing resources of Google, so in the cloud, to do your own coding and compiling of your code. I think that's a very good tool for like small projects in Python that you want to do. Now, the thing is, of course, maybe you don't know how to code Python, and that's okay because we have so many AI tools nowadays that can actually help you with this. I used here a tool called Monica, which uses resources from DeepSeek also and ChatGPT. You can probably do that with any other capable language model out there. And I gave it the task and said, I have two files here. One is showing the price data for Bitcoin, and one is showing the M2 US data. And what I want you to do, I want you to create a Python code for me that analyzes the correlation between those two data sets. So then all I need to do is two steps. First of all, I need to make sure that my data files are uploaded here, which I did. I uploaded them to the Colab cloud drive. And then I need to copy my code and paste it in here. Make sure that the names of my files are the same ones that I uploaded here on the left, and then I can run my code, and after a few seconds already I get the results. And we can see here, and this is very interesting, that the comparison of this data, M2 US M2 money supply and the Bitcoin price of Bitcoin, has a correlation of 0.786. So this is very, very close to what Chicken Genius find out. The only difference is that I used only US M2 data. He used global money supply data and saw a correlation of 0.82. So this backs kind of up what Chicken Genius is writing here. Yeah, there seems to be a correlation between the M2 money supply and the price of Bitcoin. However, what does that tell us? I mean, it's nice to know that there's a correlation, but what does that tell us about the current price levels of Bitcoin? Are they too low? Are they too high? Can we expect, based on this data, that the price of Bitcoin will decline further, or will it rise again? Well, for that, we can visualize data as well. And as I said in the beginning, I really had difficulties finding this data already integrated into TradingView. However, the nice thing about TradingView is there are a lot of users out there that make open source scripts that can help you a lot. And really, there's like one gentleman, and I think his name is called Miguel Finance, who a couple of years ago created a little script here on Bitcoin, which he made open source available for everybody. So you can copy this script and use it for yourself, that displays the world monetary supply M2. So all you need to do now is to copy this code. And I saved it then as an indicator, as a personal indicator, kept, of course, the name because I want to ensure that people know that this was not created by me, but by this gentleman. If I click on it, I can add it. It will add an existing indicator underneath my current Bitcoin price chart. And in order to analyze now where do we stand, I think I need to do two things. First of all, I want to change the color here, in this case, to red. And then I want to move my money supply indicator, my money supply script to an overlay for the Bitcoin price chart, so to the existing pane above. And once I've done this, I can zoom in and zoom out to kind of get an idea of how is the relationship here between the price of Bitcoin and the M2 money supply. And really what we can see, at least in my opinion, is that when we have a rising money supply, we have a tendency of rising Bitcoin prices as well. When we see the money supply going down, we usually see the price of Bitcoin also going down. And this is, of course, not a perfect correlation. So there are times when this works very well. There are, of course, times where the correlation is less strong than the 0.82 that Chicken Genius is talking about. What is interesting now to get an idea of are we undervalued or overvalued in Bitcoin at the moment is to look at what the current price data is doing. What we are seeing here is quite a detachment between where the money supply is at the moment and where the price of Bitcoin is. By that logic, maybe we should see actually the price of Bitcoin soon catching up again and going to, for example, an all-time high. This is what happened last time. There we saw a lag between a spike in the money supply and an all-time high for Bitcoin. So this points very strong, in my opinion, into the direction that, yeah, we could see actually Bitcoin trying to attack its all-time high maybe one more time. It doesn't need to, because just because there's a high correlation doesn't mean then necessarily also is always a causation. But of course, it kind of speaks for this case. And this is the beauty of it and the whole reason for this exercise, because as you could see, this is really an easy way to analyze for yourself statistical data. You can do this with everything. You can very easily compare all kinds of data sets and find hidden correlations to give you really an edge over anybody else in the markets. So do that, fact check what others are posting there out on TradingView. Use AI to check like your own ideas and really get a 3D view of a market, so you're not so dependent on listening to somebody on social media, to what the media in general is writing at the moment. You can check your own facts, you can create your own trading ideas and check them on the data available. I think a very nice way, a very easy way to check the markets. And if you like content like this, hey, leave me a like, subscribe to my channel, and make sure to check back next week when I'm going to talk, of course, again about my little trading challenge, trading an account from 500 US dollars all the way up to 100,000 US dollars. Still early in the challenge, although already up by 56%. Hopefully, we can soon approach the next milestone there of reaching an account size of 1,000 US dollars. See you again next week. Take care and bye bye.